Right, good day everyone. Welcome back to an accounting masterclass. We are focusing on grade 12, accounting grade 12 syllabus, and we are currently doing November 2019, and then today we are doing question 3 now from this paper. Question 3, which is based on inventory valuation. Based on inventory valuation. Question 3. Question 2 of this exam is based on reconciliation, bank reconciliation. I hope the students are aware that there has been some changes from these questions, specifically to bank reconciliation, with the country discontinuing the use of checks, and we are now only focusing on the EFTs. So there are a lot of changes which has been effected to accounting questions relating to bank reconciliation. Hence, we are deciding not to do question 2, because question 2 from this paper, which is November 2019, is still talking about checks, and we know that checks have been phased out, so they are no longer in use. We do not find checks anymore in accounting transactions. So therefore, we are skipping this question and we are proceeding to question 3. And question 3 is based on inventory valuation. Inventory valuation. Inventory valuation. Right, stock valuation. George Grand is the majority shareholder and the CEO of George Grand LTD. The company supplies hotels with cabinets and lamps. The periodic stock system is used, and the year end is 20 September 2019. Required. That's 3.1. Cabinets. 3.1 deals with cabinets. That's 3.1. Calculates the value of the closing stock for cabinets on 30 September 2019 using the first in, first out method. Value of the closing stock. Value of the closing stock. We want to calculate the value of the closing stock using the first in, first out method. Remember, when the business is using the first in, first out method, the older stock is sold first. It's first in, first out. And therefore, the closing stock will come from the stock that has been recently purchased. And when we go to our information on page 9, the stock records of cabinets, the total number of units in the closing stock, the stock balance is 1st of October with 2018, which is the beginning of the accounting period. We had 370 units as an opening stock, and then the closing stock on the 30th of September 2019 is 280 units. We are having 280 cabinets in the closing stock. And when you want to calculate the value of the closing stock using the FIFO, you must start from the bottom and move up. The last stock that was purchased here, it was purchased in July, and it was 250 units. And there is also returns from July stock. There is returns, which is 20 units, and the unit price is 1,100. So there is returns in the July stock. Therefore, July stock will end up having 230. So this is 280. You will have 230 units in the July stock. How do we see that these returns are coming from the July stock? The unit price is telling us, because we have returns of 20 units at 1,100, and July stock, the unit price is 1,100. So therefore we are left with only 230 units in July stock, and the unit cost is 1,100. 30 multiplied by 1,100, 30 multiplied by 1,100. Let me take my calculator here. 230 multiplied by 1,100 will give us 253,000. That's from the July stock. But the total number of units in the closing stock is 208. Remember, we are starting from the bottom, the last stock that was purchased, which was purchased in July. And therefore now, because the total number of units in the closing stock is 208, we need to go up a little bit. We need to go up a little bit, and when we move up, we are going to April. And how many units do we need from April? It's 230 minus 280 minus 230, so we need only 50, because it should make up a total of 280. 230 plus 50 equals to 280. So this 50 unit is taken from April stock, and April unit cost is 990. April unit cost is 990. So 50 multiplied by 990, 50 multiplied by 990 equals to 49,500. 49,500. 280 units, right? So now the 230 is taken from July stock. We're starting from the bottom, and the 50 is taken from April stock, and the unit cost for April stock is 990. So let's confirm the calculation for April stock is 50 multiplied by 990. That's equal 49,500. So the total value of the closing stock is 49,500 plus 253,000 equals to 302,500. That's 302,500, which is the value of the closing stock according to the FIFO method. It is very important that students should be able to calculate the value of the closing stock according to the FIFO method. The FIFO method, when you calculate the value of this closing stock, you start from the bottom and then you move up, and you are being controlled by the total number of units as to how far are you going to move up. So we started from the bottom, which we had 250 minus 20 returns, that was 230, and we had to go up a little bit by 50 units so that we can make up the total of 280. But if you are calculating it using the weighted average, you should also be able to calculate the value of the closing stock using weighted average, wherein you have to calculate the weighted average price, which is total cost divided by the number of units, and then the weighted average price, you multiply it by the total number of units in the closing stock to get the value of the closing stock. So, but for now, we have calculated the value of the closing stock using FIFO method or FIFO method. Right.